Hello friends, how are you all? Yes students, today we will be doing video number 9 of the Ind AS 40. Today is our 9th video. I had provided you with the disclosures in the previous video. In the disclosures, what did I tell you? What you have to write in the notes to accounting regarding the property. Give reconciliation statement of property, reconciliation statement of depreciation, your operating expenses and rental, and tell that what was your net gain or loss. We had discussed all the disclosures. In today's class, I will be teaching you the remaining practical questions related to Ind AS 40. Since the concepts are over, I have nothing left to tell you. Wait, I know you might have a query. Right? I was saying that I will discuss questions, but you can only see the study material on the screen. I will tell you why did I put study material on the screen. So I've put this study material on the screen for a reason. Because I want to show you that the study material of your new course, that the study material of the new scheme. What work did the institute do in that? This Ind AS 40. I have already put the new study material on the screen. From this I have took some screenshots, which I have to tell you. What did the institute do? First, they gave you the chapter Ind AS 40. They gave the concepts and the question. We have done all of it. I have explained every concept to you. But when I reached the end of Ind AS 40, so they have printed some extracts of the financial statements in the study material. By printing the extracts of the financial statements, they believe that they have completely conveyed their knowledge to you, but they don't know. You can ask the students to go to Google and check the financial statements of any listed company. Tata, Birla, Ambani, Adani. There are so many listed companies. In stock market, all listed companies are compliant with Ind AS. You can find the annual reports of any company on their website. Look for the property disclosures in notes to accounts. But no, what did they do? They took the financial statements of a random company and printed them in the study material. So many times it can come to your mind that why these extracts are given. This is just a justification for your knowledge. Look, this has nothing to do with your exam, okay? This is just for knowledge to show that what you learned is reflected in company's notes. That's the only justification. So I'm showing you this on the screen. What did they do first? They showed you the non-current assets. They want to tell you that this is your balance sheet. This is to show you that in the balance sheet, what is the place of investment property? So they chose the statements, but they were not done properly. Why? Firstly, it's PPE. After PPE, there is intangible. So this company wouldn't have any intangible, that's why we can't see them. Then there is capital WIP. Then untangible under development. But here is no intangible, so nothing under development. Then there is investment property. They are trying to show where the investment property falls under non-current assets. So they should have chosen a company like that, right? Where all the assets are there. So we know the correct location where this property is shown. So in the current year it is 0 and in the previous year it was this much. It is in crores. Did you understand? Property was there last year, but this year it's not. It might be sold. If they wouldn't have sold it, so they might have transferred it. The intention would have changed. Will we give it on rent or not? Either it has been disposed of or the intention has changed. Look, we've come to notes. In notes to accounts, they would have explained the investment property in the 4th point here. So first of all, you will get the reconciliation. This is reconciliation from here to here. This is for the IP. This is our opening balance. These are the purchased one. These are sold. These are for the renovations. Expense capitalized. Here, this says that assets classified as held for sale. What is this? The intention has changed, right? Held for sale means it will be put from 40 to 105. If it will be put into sale, then goes to Ind AS 2, but it's held for sale, so to 105. They must have done this. Here complete reconciliation is given. This is from the previous year and this is from the current year. So these statements that you are seeing are not necessarily going to be in this format. You can make it in a horizontal or vertical format. The presentation is up to you. Their headings are up to you. However, financial statements should include the information that is asked. Here they have reconciled the depreciation. It will either be charged as depreciation in current year or it will be removed when the assets are sold. Same thing is done, charge disposal. This is the reconciliation that I explained to you. So they have covered this part of reconciliation. So what we noted in the disclosure, they have shown it. One thing I told you. In the notes to accounts, we need to give one more information. How? What was the rental income and what were your operating expenses? What was your profit or loss? How much rent did you earn? What were your expenses? You have to tell them what you net earned from the property. That detail is given here. The notes to the accounts contain information about the investment property regarding the disclosures we covered. You can see this related information in the extracts. So what is this? This is only the justification of the knowledge. What you have learned is visible here. Okay? This is the accounting policy. Company has printed it. In accounting policy, we say we have recorded investment property in cost model. In the notes to accounts, it's shown in the fair value, depreciation from SLM-WDV, and so you need to give the complete declaration. We initially recorded the investment property at cost. This includes your transaction cost. Entire story is written. From this, we have applied the cost model, right? What's deducted from cost? Depreciation and impairment loss are deducted. We have also capitalized the borrowing cost. In construction project, I have made you write down a point in construction. The whole story that Ind AS has said, we have done it. We have applied depreciation as per SLM. Entire story is written in accounting policy. We have done what is mentioned in 40. We haven't divided even by 1%. You see, we are taking the fair value in disclosures. And here it's provided in note 50. If you go to note 50, you will get the fair value of the property. Fair value of investment property in notes to accounts in note 50. Everything we have studied, you will find all those details. The way to write this information is different for each company because each will prepare reports according to their knowledge. But it should contain the information. So if any student is studying on their own and they check the study material, they shouldn't be scared. You have read all these things. But you can only relate to these things when you have read them all in full detail. And if you have taken helicopter view, then these things won't make sense, they will just pass by. Then what did the institute do? They have placed a scanner here and they say that scan this, it's summary, shortcut. If you are traveling, you have taken the classes for Ind AS 40. If you want to summarize or revise the Ind AS 40, then there are two ways. Keep your notebook with you and revise from that notebook what you had written in your notes. This is the best method. Second is this institute's code. You can scan this and a summary will open in front of you. Check it. It is in such a complicated form that you will not even feel like reading that summary. But I want to tell one thing to all the students that do not take shortcuts. Make it a habit to read from your copy. Your copy is written by your own hand. You'll be able to connect to it. All the concepts should be imprinted in your mind if you refer them from your copy one by one. And I am not in favor of flowcharts because flowcharts only have headings but there is no content. Also, there are many main points within them. So please make it a habit to revise from your copy. It will be better. Otherwise, ScanMe is with you. But students, I have never referred to all this. So I have checked the study material for you. Now I will take you to the practical questions. I will ask you some questions today. I am at question number 6. I have put 6th one here. Why? 1, 2, 3, 4, 5. We had finished all of them. I have taught you 1, 2, 3, 4, 5. They are very small. I want to read the 6th now. I will start today's lecture from here. Today's lecture begins from here. I have marked this as important. You should read the question. Any student who need time to read question? I will not say anything because you know that you can pause me. These financial instruments, these are extracts from financial statements. They will not come in exam, it's only for knowledge. There is nothing to worry. How can you become a CA if you're afraid of financial statements? Look here. Classify the following cases of the given properties. They have given you so many cases and now you have to tell that which property will fall under which Ind AS. And tell which Ind AS should be applied on these properties, which property will fall under which Ind AS. Now you have complete knowledge of Ind AS 40. I've run out of concepts too. Now we can properly practice all the questions. So I will teach you all the cases one by one. Firstly, I have case number 1. Read the headings. Property. Does it meet definition of investment property? Does this fulfill Ind AS 40? If it is an investment property, then write yes. If it is not an investment property, then write no. And tell which Ind AS will be applied here. This is an interesting task. It's interesting task for you. You don't have to write it in your copy. You can note it in your book only. The first point, owned by a company. Okay. Leased out under an operating lease. In operating lease, can we transfer the ownership? No. In operating lease, there is rent agreement. An operating lease is our pure lease. I am owner of a property. I have leased it to someone on operating lease. So I am a lessor. And I am also the owner. Ownership will remain with me. Yes. This is rental agreement. Operating lease is a rental agreement. In a finance lease, the asset is sold. Ind AS 40 will be applied. And I told you, this operating lease is your genuine lease. A finance lease is a kind of sales contract. And the question says that held under a finance lease. Held under finance lease means I am a lessee. I am the assumed owner. So when I am the assumed owner, I will be asked that what I will do. If I will use it, then apply 16. I will let out it on the operating lease, then L will be applying 40. If I give it on finance lease, then we will ask the third party what they will do. Leased out under an operating lease. Yes. Ind AS 40. I had an asset which was on a finance lease. I am the lessee, the assumed owner, and I have let out it to someone on an operating lease. An operating lease means I will get rent. If I used it myself, I would have applied 16. If I'd leased it, I would have asked the third party. It would have been out of my hands. No Ind AS will be applied on me, only 116 will be applied on rentals. We will completely revise the Ind AS today. The third case, held under a finance lease. I am the assumed owner. Okay. Leased out under a finance lease. I took an asset on a finance lease, recognized it, and then leased it out on a finance lease. As soon as I move forward on finance lease, I have to de-recognize it. Property is no longer in my possession. It's with third party. So I will ask him what he will do. So I am not creating third party books. I will write no. Ind AS 116 will be applied here for rentals. All these things are already written in your notebook. Before you will ask that, where is all this written? I told you all this in lecture number 2 when I told you the relationship of Ind AS 40 with 116. So you can see your concept number 3. It is written in your copy. Revise it if you want. It will be good for you. Even if you have 1% doubt. So revise concept number 3. Now the fourth one. It says property acquired with a view for development and resale. Resale means you do this work buying and selling. You are building a property for sale? The answer is no. Apply Ind AS 2. I'll apply Ind AS 2 on this. Resale. Moving on, I've reached point number 5. Property developed on behalf of the third party. Who develops the property on behalf of the third party? Contractor. Yes, the contractor will do it. 115 will be applied. Is this an investment property? No. On behalf of a third party. You should write contractors. Okay? I have come to the 6th point. Look, I have reached the 6th point. Property, partly owner occupied and partly leased out under an operating lease. This is a mixed property. If it is a mixed property. If it's a mixed property, then 2 Ind AS will be applied. This is a mixed property. 2 Ind AS will be applied. Ind AS 16 will be applied on use. And Ind AS 40 will be applied on let out. We have assumed that this is the case of separable. We assumed it as separable. Since the answer to inseparable depends on whether it is significant or insignificant, it would be difficult to write here how we would write it. If you consider it separable, it will be easy to write. So I have quoted the maximum possible answers in this. The 7th point is, 7th point, land held for currently undetermined use. I had explained this point to you previously. This is written in the various issues. When a land is purchased without deciding. So we look at it in terms of appreciation. So yes, we can apply Ind AS 40 to this. My assumption is that Ind AS 40 is at your fingertips. You know everything. I've worked hard teaching you. We sowed the crop. And now as the crop has grown, it's time to harvest it, right? We are doing questions. 7 points are done. 7 points have been completed. We should move on. Now I've reached point number 8. Property occupied by employees. We should not go any further. It doesn't matter whether your rent is paid in full, partially or not at all. Concept of rent doesn't apply here. If the employee uses it, then it is owner occupied. If it is occupied, then you will apply 16. Paying rent at less than market rate. Even if the rent was at the market rate, still 16 will be applied. The answer is no. I will apply Ind AS 16 to this as it is an owner occupied property. This is PPE. Okay. I have came to point number 9. Investment property held for sale. It is held for sale. Held for sale? The answer is no. Ind AS 105. Pay attention on the wording. If it says put into sale, so put it to sell means we kept it for sale. So Ind AS 2, inventory, held for sale, where the word held will come. because the title of Ind AS 105 is non-current assets held for sale. Now it's point number 10. What does point 10 say? Existing investment property that is being redeveloped for continued use as an investment property. You have an investment property, you are redeveloping it, and even after redevelopment, that will remain an investment property. Yes, even after getting redeveloped, it will remain an investment property. Earlier 40 was applied, still 40 will be applied. There is no change in intention and no case of transfer. Apply Ind AS 40. It was total 10 cases, which were covered in different Ind AS. Look, what a good question. The entire Ind AS is basically revised here. Then after that, we have studied this 7th. 8th was also studied earlier. 9th is given in the homework. 10th was also done. 11th one is already taught in class. All of them are small questions. Move on to question 12. This is a very easy and a basic question. I am reading the question. I don't want to waste your time. You need time to study. You know what's the technique? Moon Limited has purchased a building on the 1st of April X1 at a cost of 10 million. I'll write it down. 1st of April X1. And I'm being told that the cost is 10 million. Okay? I should read the question further. The building was used as a factory by the Moon Limited and was measured under the cost model. Read it carefully. The building was used as the factory by the company under cost model. Factory. If it's a factory. So Ind AS 16 will be applied as PPE. And if it's a cost model, we will deduct the depreciation and the impairment loss. Let me read the questions. The expected useful life of the building is estimated to be 10 years. If your property is worth 10 millions, its lifespan is 10 years. So depreciation per annum will be of 1 million. That's a valid point. Due to decline in demand of the product, the company does not need the product, the factory anymore. They don't need the factory. The factory is not needed because the demand for the product has decreased, has started, has rented out the building to the third party from 1st of April X5. March 31st X5. It's starting from here now. You previously had a factory. Production decreased and the factory is closed. They started renting it. So this became a change in use. So this becomes the transfer case. Transfer will be at the carrying amount. So from Ind AS 16, we will move towards the Ind AS 40. But tell me one thing. See X1, X2 first year. X2, X3 second year, X3, X4. Third year, X4, X5 fourth year. In 4 years, you would have applied the depreciation of 4 million by then. 10 minus 4. This will be your WDB, which we refer to as the carrying amount. So it's transferred to 6. So if you are asked that at what value your factory will be going into investment property, then your answer should be 6 million. Let me read the question. On this date, the fair value of the building is 8 million. You don't need to read the fair value. Why? Transfer is always made at carrying amount. And your carrying amount is 6. It will be transferred to 6. Now it has came out of PPE and into the 40. Tell me, what do we apply in 40? Cost model? We don't read fair value in cost model. Yes? If you want to show them this 8 million, then you can put them in the notes to accounts. Whenever it will be transferred, it will be on carrying amount, which is 6 million. It will be transferred on 6 million. And the fair value we can show in the notes to the accounts. Company uses the cost model for accounting for property. They are not doing any favors. Cost model is used for investment property. So you have to write notes on this. So let's write notes on it. Question number 12. Write its solution. In the given case, the following observations. Have been we have so many things. Point number 1. The entity has used the property as its factory from 1st April X1 to 31st of March X5, 4 years. Due to which the entity should consider application of Ind AS 16. During these 4 years, the entity has rented out the said property I have only written this much. The factory was used for first 4 years, apply 16, and now we have rented it out. First April X5, due to which the company should start. The company should start application of Ind AS 40. The entity should transfer this specified property from Ind AS 16 to Ind AS 40. At carrying amount, on April 1st. X5. The entity should ignore the fair value of 8 million at the time of transfer. Because transfer is always made at carrying amount. The disclosure of $8 million can be given in notes to accounts. Question was simple, but had so many points in it. First apply 16 and then we will apply 40. Then we will transfer at some amount. We will ignore fair value and show it in notes to accounts. This was all the question was about. Just a presentation. After this, you should read question 14. Let me check once. If you lag behind in taking down notes, you know what to do. So I'm assuming that you will pause the video and take down the notes as I was a little fast. So take your time for the noting. And 12th question's done. I explained 13th too. Look at question 14. This question is small too. Question 6 is done. Question 12 is done too. I am at question number 14. X Limited has an investment property building which is carried in the balance sheet on March 31st, 20x1 at 15 lakh rupees. Okay. Let me draw a timeline. We are talking about March 31st, 20x1. How much is investment property worth? So it worth 15 lakhs. Okay. This is carrying amount. During the year, X Limited has stopped letting out the building and used it as its office premise. Okay, students? Letting out stopped. It was taken for own use. What does it mean? It means you have to transfer the IP to the PPE and it's transferred at carrying amount. Look here. This time things are reversed. We are going from 40 to 16 on 31st March 20x1 here. Management estimates that the recoverable amount of the building as rupees 10 lakhs and it has a remaining useful life of 20 years. The residual value is nil. That's great. How should X Limited account for the above investment property as on March 31st, 20x1? Students, a little bit attention here. We will have to read the dates. if you do not take caution, if you don't read the question carefully, there is a 100% chance that you might make a mistake while solving it. The biggest issue in the CA final is that the question needs to be read and understood. You know what question is doing? I will show you what the question did. The question is asking you to tell from X Limited's point that how X Limited will do accounting of investment property here. Look at the accounting date, means it is asking for March 31st X1. What accounting will be done on March 31st X1? Moreover, we are given during the year X Limited has stopped. This is a case of transfer. This happened between X1 and X2 indicated by during. And where am I? Currently I am here. The accounting is being asked from me at this. Look carefully here. Accounting is not required during the year. I am currently at 40. I need to transfer from 40 to 16, but the question is not asking for accounting at transfer. It is asking for the accounting under 40. And accounting is asking for the previous balance sheet date. You are not required to do any accounting during the year. This particular property began to be used as an office space in the year X1 and X2. And accounting is being asked for previous year, that is March X1. And he's telling me about the recoverable amount. Look at the examiner's mindset. Recoverable amount. Market value is 10 lakhs. And look at the date given. It is 10 lakhs on March 31st X1. So on March 31st X1, you have a carrying amount of 15 lakh rupees with market value of 10 lakhs. So what model do you apply to the property? You apply the cost model to the property. Is there an impairment loss in it? Definitely yes. What to do on March 31st X1? An impairment loss of 5 lakhs should be booked under the Ind AS 40. We haven't transferred it yet. We will transfer it next year. So the value of the property will be 10 after subtracting 5 from 15. And when we discuss the transfer, the carrying amount will be 10 lakhs for you at that time. 10 lakhs will be transferred. That means the impairment is happening first and later transfer. So at the time of transfer, we transfer at the carrying amount. But impairment has occurred by the time we reach carrying amount. We don't check for impairment on the transfer date. Transfer happens on carrying amount, but what is question asking? Impairment happened previous year. Transfer happened next year. See question. It's a small matter. In the paper it comes as, we won't consider 10 lakh market value. We will transfer it at 15 lakhs because transfer is done at the carrying amount. First read the dates which are given in the question. And here, the transfer is happening during the year. Here during the year is X1 and X2. The solution for 14th question will be. So first I will write calculation of carrying amount. As on 31st March X1. Carrying amount as per balance sheet is 15 lakhs. I will subtract impairment loss from this. There is an impairment loss of 5 lakhs. Revised carrying amount would be 10 lakhs. right under transfer. In the given question, the transfer has taken place. During x1, x2. Is it clear? But recoverable amount has been mentioned for March x1, which is related to an earlier date of transfers. So we need to recognize impairment loss. After this, right, it can also be said that transfer of property will be made from Ind AS 42, Ind AS 16 at 10 lakh rupees. Which is revised carrying amount. On the date of transfer, if you are given the market value, we will never count it because the transfer takes place at the carrying amount. And the market value of this is 6 months old. If we assume that during the year, let's say mid-year, it's 6 months old, it is the working. The whole question is about dates. Be careful and cautious. It's simple. The question was very small, but you might get its answer wrong. This was question 14. Question 15 has been done. We have done 16th and question 17, question 18, question 19, question 20 as well as question 21. Okay. 22 was homework, 23 was also homework. You can check number 24 in your workbook. Question 25. About question 24, it is your homework. It's very easy. You can do it. See 25th. Put a tick on this because it's important. And in this, I will explain the self-construction part in this. Okay, now I'm stopping. I've put down my pen for 5 minutes. Read the question. Now you don't need to pause the video. Quickly glance at the question. Twenty-fifth one. Question number 25. So read it. So after looking at these long type questions, seeing such a long question, students ask me to do it in class. And believe me, in this question, there is no such information which is going to give you tension. This question looks lengthy, but it isn't. The next 3 to 4 questions will seem lengthy and challenging to you. They will look of higher level. But this question isn't difficult, it's easy. N. Investment property. Company has been constructing a new cinema. Let's suppose there is some company that owns an investment property and operates by renting out that property. And what are we constructing? A cinema hall. As on December 31st, 2016. Okay, students? I will draw a timeline. You are being told the information about December 31st, 2016. Okay. What is written after this? The cinema was nearing completion. And the cost incurred to date is given and work on. Cinema is about to be completed. And how much money has been spent? Question is telling you about it all. And the first thing is that, why is this cinema given here? The film will be shown in the cinema. For that, tickets will be sold. So, if tickets are sold, then it becomes a business. A hotel and a cinema both are business. Cinema is not a property that we rent out. If we run the cinema ourselves, it will become a business. It is also a possibility that you built a theatre and leased it to the PVR group. It's a different story. A different matter. I went inside a mall. It was under construction in Gurugram. And the top floor of the mall had 4 screens. So when I visited that mall, they told me that they had a tie-up with PVR. I could purchase that floor from them. And PVR would pay its rent to me. They will also give me a share from the sale of the tickets along with a portion from the sales from the canteen. So this can happen. We can construct a theatre and then rent it out. While renting it, 40 will be applicable. It will be 16 if we run it ourselves as tickets are sold. Let's see further. They are telling you the cost calculation. The material costs so much. Then other directly overheads costed this much. Interest on borrowing is this much. I had explained you a point in class. At the time of self-construction, Ind AS 23 allows you a capitalization on the interest. Do you all remember it? Only if you have taken a loan for construction. When construction is complete, interest will be listed in the P&L going forward. Check your notebooks for this point in the case of self-construction. So I will also capitalize the interest. If I add up all of these, what will be the total here? 148, 25 and 13. So I will get the cost till date. We will get the cost till date as 186 lakhs. This includes 148 lakhs. 25 lakhs and 13 lakhs are included. And then we can capitalize this based on Ind AS 23. About Ind AS 23, I had told you I would cover it in the first module. All this information is up to the date of December 31st, 2016. So, All this information is up to December 31st, 2016. Now we should proceed. In this company's policy to capitalize interest on specific borrowing raised for the purpose of financing a construction. Look here students, we already know all this logic. Here the amount of borrowings outstanding at December 31st, 2016. In respect of this project is 180 lakhs and annual interest rate is this. We have loan of 180 lakhs and its interest rate is 9.5% per annum. It's no issue, we will see. You are given loans information. Interest has been given to you. What's the use of loan and interest rate? They are of no concern. Without interest amount given here, you will need to calculate it. We have this information given which is up to December 31st, 2016 and we should proceed further. What's in question? During the 3 months, if we add 3 months to December 31st, 2016 to March 2017, the cinema we were talking about has been completed. There are some additional expenses. No problem. Material labor 17 lakhs, other overheads 3 lakhs, so total is 20 lakhs. And then I need to multiply 180 by 9.5% into 3 upon 12. Also calculate the interest. And I will also bring this interest here. So the amount of the loan and rate of interest is for 3 months. Interest up to December 31st, 2016 is in question. What will the interest be for the next 3 months? All the information is given. So find this out. How much interest? 180 multiplied by 9.5 into 3 upon 12. So we will get 4.275 here. Take this 4.275 here. This will give us 24.275. What is my previous balance? It's 186. How much more should I add to it? 24.275, which will give us 210.275. What is this value now? This will be the total cost including the interest. It's case of self-construction. Read further. The question further says that the company was not able to determine the fair value of the property reliably, the construction period, and so valued it at cost, pending completion. Such a story about constructing a theatre, but the theatre was not completed, so could not determine its fair value. What's use of fair value? It can only be reflected in notes and not in books. On March 31st, 2010, there's a printing mistake. It's 17. On 31st March 2017, the company obtained a professional appraisal, okay, of the cinemas, fair value. And the valuer concluded that it was worth rupees 240 lakhs. The fair value is 240 lakhs. How much is the cost? It's 210. Books will just have cost. I can show fair value in the notes. The question further states that the fee for this appraisal was 1 lakh rupees. If you have paid any fees for getting valuation, I have already told you about Ind AS 113. 113 states that valuation should be done by independent valuers. Here the valuation was done by independent valuer at a fee of 1 lakh rupees. This fee of 1 lakh will go to P&L. Read further, has not been included in the above figures for cost incurred. The 1 lakh rupees spent on valuation will not be included in the cost. Question is saying that the fee was not included in the cost. but it shouldn't be included. Didn't include it in the cost. The costs that were incurred in the 3 months don't include 1 lakh rupees, but fact is, it's like that because it's not the cost of construction, but the fee for valuation. So, written off in profit and loss. Fair value goes in notes to accounts. Cost goes to balance sheet and only includes construction expenses. Here is a long lengthy story given in the question. So nothing of concern here. Let's proceed. The cinema was taken by a national multiplex chain. Okay, students? On operating lease, about which I was trying to explain to you earlier. Owner is not running it. The cinema is run by some company like PVR. Owner rented it. It was given on 1st April 2017. Cinema became ready on March 31st and rented on 1st April. This means that the property has been developed for letting out only. So apply 40 because it's matter of property. And it was immediately welcoming. Capacity crowds. To come and watch the movies. Theatre is ready. It was offered to crowds. Following a complete valuation of the company's investment properties on December 31st, 2017. The fair value of cinema was established at 280 lakhs. On the day this theatre was prepared, on the day this particular theatre was made ready, on that day its market value was 240 lakhs. When the time came for balance sheet, its fair value became 280 lakhs by that time. Let me repeat this again. Whether the fair value is 240 lakhs or whether it's 280 lakhs, it doesn't matter. It will go to notes to the accounts. In the books, the cost model is applied. We will show it at cost. So, if I were to do the accounting for December 31st, I would show 280 lakhs. For March 31st, I will show 240 lakhs in the notes to accounts. Now, the requirement of the question depends on what dates accounting the question asks for. So, the question asks me, set out the accounting entries in respect of the cinema complex for the year ended December 31st. It is asking you to tell the entries. It's asking for entries of December 31st, 2017. It's asking for the entries for December 31st, 2017. So then these would be the entries. A material expense incurred. This is the overhead expense. And it's an interest expense. These three things needs to be capitalized. Then you have to mention the total cost below. You can also tell me that the balance sheet doesn't include a fair value. It has a descriptive answer. Let's solve this together. It's in the solution book. You can skip if you want, but we will be doing it anyway. I have read the entire question for you. The 25th question is, if I were to give you journal entries for this, then I will pass the first entry as construction, WIP, account debit to bank. What was the cost of material? 17 lakhs. Being you can do the total 17 plus 3 because it depends on passing different entries. 20 being 17 plus 3. Expenditure incurred on material, labor, and overheads. Then we will write in the B entry interest on loan account debit 4.275 to bank 4.275 being interest paid on loan for 3 months $180 9.5%. 3 by 12. If you see the answer from the class book, it is rounded off to 4.3. I have only written the exact amount of interest for this, okay? If you want to write 4.3, it is fine. Now capitalize this interest as well. Construction WIP debit to interest. We also capitalize the interest. This interest won't go to the P&L account. 4.275 being interest capitalized. To the cost of construction. The loan you took is for construction. Ind AS 23 gives permission to capitalize. Now let's move to point T. And an entry should be passed. Investment property account debit to construction WIP. $210.275 $210.275. When your construction is completely done, then your construction WIP will be converted into an investment property, being construction completed. Means your construction is complete and your theatre is on let out now. And how was this amount formed? It will be shown in the working notes. Calculation of cost of investment property we want to see that until the work is completed, what could the total cost be? So first we'll write cost incurred till 31st of December 2016. How much cost have we incurred? 148, 25 and 13. Your total will be 186. 148 25, 13 lakhs, 186 lakhs. Expenditure incurred. From 1/1/17 till March 17th. So you know that 17 plus 3 plus 4.275, which becomes 24.275, total 210.275 lakhs. And the answer in the book is written in a very casual form, okay? I have made you write the correct answer. Okay, we can also add some additional notes in this. The presentation of fair value of 280 lakhs can be made in the notes to accounts only, because cost model is allowed for IP. The expense of 1 lakh rupees which has been incurred on valuation should be written off in profit and loss account. If you look at it, the question is simply about adding up the expenses. First, calculate the total up to 2016. Then we calculated the total for 3 months and made entries. We were asked to make the entries and we did. Even made 2-3 notes. These questions are just for practice. There's nothing else. One gave you the fair value of 240 lakhs. That fair value of 240 lakhs was dated for 31st March 2017. So this value is of no use to us as the books close in December, right? Okay, those were the details. If I check the answer from the book, look, they've given these entries but in a casual format. What was the need to write it again and again? So this entry can be combined. I have already combined them. This entry has 2 steps. First, the interest payment was made, then it was capitalized. Then one entry is missing in this. Neither the investment property was capitalized nor the construction was completed. Rest of the answer is correct. So please, class, do refer this answer. After this, let's read another one. We will come back to question number 26. These are all MCQs. Look. We are on question number 32. This is acquisition is on cost. Okay, I will cross-check each and every question with you. But first, let's summarize the important ones. Let me read question number 32. Absolutely simple question. It's a very simple question from Study Mat. Netravati Limited What an interesting name. Netravati Limited. So Netravati Limited purchased a commercial office space as an investment property, okay? Hence, if the question says it's an investment property, the dispute ends. Ind AS 40 will apply. In the institution called as the Global Trade Center for commercial complex, the name of the property is Global Trade Center Commercial Complex, which means they bought some space or area inside a commercial complex. They won't use it, but will keep it on let out. If they put it on let out, then what's the investment property rate? How much did you buy it for? For 5 crores. The cost is also given. However, for purchasing the same, the company had to obtain the membership of the Global Trade Center Commercial Complex Association by paying 625 as a one-time joining fee. There's not much. If you decide to buy a shop in a shopping mall or rent a space in a shopping complex, you'll need to consider some facts. So basically they have an association. This ensures smooth workflow. The membership for 625 has been purchased. Hence, if you want to rent office space in the Global Trade Center, you have to pay a one-time joining fee of rupees 6,25,000. So now this fee that you have submitted of 6,25,000, should we include this in the cost or not? As if this is a lifetime fee and is related to the purchase, then it will include in the cost. This isn't a day-to-day service, right? We are not providing any maintenance here. Netravati Limited wants to write off the one-time joining fee paid as an expense under membership and subscription charges, alright? And value of the investment property is 5 crores advised. They want to write off in 625. The seek advice. So the first thing is, if you want to buy property in a global trade center, you will have to become a member of their association. If you want to become a member, you must pay the fee. It is not annual. And if it was annual, we'd write it off once, but this is a lifetime, a capital amount, right? You'll have to become a lifetime member to buy property. So the money you pay should be added to the property cost. Let's assume you are selling this property. Children often think, what is the reason you will sell this property? So someone new will buy this, but he doesn't have to pay the membership fees again. The papers are transferable. Our membership will end and their membership will begin, okay? So we will collect the membership fee from him, but the cost of our property is 5 crores 6,25,000, right? Basically, when we sell this property, we'll collect it from the new buyer. But you cannot treat this as an annual fee. No. That would be wrong. So would your answer change? If the office space was purchased with the intention of using it as the administrative center of the company, will your answer change if you consider this as PPE? No, the answer will remain the same, right? Whether it's an investment property or PPE, the expense that is related to the purchase of assets, that will be added to its cost. And for your information, my answer is still the same. If I talk about the solution in this case, in this given case, lifetime membership fee of rupees 6,25,000 should be added to the cost of investment property, because it is not paid as day-to-day regular costs, but it is paid for one time. As capital expenditure, if membership fee would have been paid on an annual basis, then pay attention. We would have considered it as normal expense. So, the cost of investment property should be considered our answer will remain the same. If the property is a PPA, if property is assumed to be an owner-occupied property, you are buying a lifetime membership fee, the cost will be adjusted whether it is your IP or PPE, our answer will be the same. The way to calculate the assets cost will remain unchanged, right? You're thinking that do these type of questions come in the exam? Whether it comes in the exam or not, you should study this topic. After that, you should read this first. Question number 33. This is a very important question, please mark it. That's a very good question, students. It will come in the exams for at least 10 marks. I'm putting my pen down. Here you go. Meanwhile, you can take a look. That's a very important question. You need time to read the question, sure. I will wait for you. But you can take your time. Read carefully, that's a very good question. That is a very good question from the examination point of view. You all must be thinking that, is this a question or an essay? And it looks like a long paragraph in form of an essay, right? Want me to read it? But then there's no point. So if any of you need time to read the question, they can pause and read it. There is no problem in that, okay? I want you to have a look at the question. Eventually we are going to do it together. This one is from the study material. This should be in your knowledge. But first, students, I want you to read this last line, because the answer to this question is in the last line only. In this last line, the question says, examine and show. As in, you examine the case study and tell how the 3 events would be reported. How many events are we talking about? 3 events. There are 3 events in this question, okay? So your answer will be at 3 different events. So there must be some information in the question, right? If the event will change, we will change our answer to 3 events would be reported in the financial statements of X Limited for the year ended March X6. March X6 means our current year is running as X5 and X6. This is the current year on which you need to report. Very good. I agree with everything you said. 3 events. I'm a little excited to read about the events are in this question. X Limited is engaged in the construction industry. They're talking about DLF Mall. It's in the construction industry. So in the construction industry, these builders, if they develop any property, they do it with the intention of reselling it. Okay? If we plan to sell something in the near future, we use an Ind AS inventory wise. What does it mean? Prepares its financial statements up to 31st March each year. Are we clear? It is under construction. The books are closed every year on March 31st. April 1st, X1. X1, X2. X2, X3. X3, X4. X4, X5. X5, X6. In total, it's 5 years. 1 out of 5 becomes the current year. So, how many years from the past? 4. So the question is, if I'm standing on March 31st, the information you're providing is from 5 years ago. 1st April X1. X Limited purchased a large property consisting of land. It's not a building, it's a land. And then the depreciation issue is over because depreciation does not apply to land. Keep in mind, it's been 5 years. 4 are old, 1 is from the current year. How much did they buy the land for? 2 crores. And immediately begin without any delay to lease the property to Y Limited. Alright. 1. Operating lease. Okay. Basically, they bought the land for 2 crores and leased it out. Which lease are they referring to? An operating lease means the ownership of the asset remains with us. We are the owners. And the other party, the tenant, will pay you the rent. This means that I will refer to X1 and X2 as an IP. X2 and X3 is an IP as well. X3 and X4 is also considered as an IP. X4 and X5 is an IP as well. But X5 and X6, this I have to check, okay? So for the past 4 years, I have a piece of land that is leased out. It is my investment property because I have given it on an operating lease. Let's continue reading this. Okay, so the annual lease rentals were 20 lakh rupees. You get a rent of 20 lakh rupees per year. Bank account debits to rentals, then rentals to profit and loss. Hence, rental income goes in our P&L accounts. I understand everything now. Let me read the question further. On March 31st X5, you understand what 31st March X5 means? I am standing here. You understand the meaning of standing here? Means at the end of the 4th year, the first year passed, the second and third followed. I am at the end of the 4th year, March 31st X5, okay? Remember, on March 31st X5, the fair value of the property was 2 crores and 60 lakhs. You know very well that this is our investment property for X4 and X5, alright? Cost model applies to investment property. We do not apply the fair value model. We will put 2.6 crores, can be shown in the notes accounts but cannot be included in the books. Therefore, this fair value is not considerable for us. And by the way, this fair value is for March 31st X5. And I need to do the accounting for March 31 X6. I have read the question. I'm trying to understand under the terms of the lease, Y Limited was able to cancel the lease by giving a 6 months notice in writing to X Limited, alright? So our tenant can cancel the lease at any time, but he'll have to give a 6 months notice. Do you understand? So, Y Limited is our tenant. So basically, Y Limited gave this notice on March 31st X5, okay? Here, I am still standing on March 31st X5, meaning at the end of the 4th year. Is that clear? Okay, its notice arrived in March. There is a 6 month notice. Add 6 months to March 31st. The property will be vacated on 1st of October. And the 1st of October, which will be here. Okay, here it is, 1st October. X5, 1st October X5. Your property will be empty. Because you have received the notice in March X5 for the 6 months, okay? Question will surely arise this query. Let me read. And vacated the property on September 30th X5. October 1st or September 30th, it's the same. 6 months notice was given to vacate. On September 30th X5, the fair value of the property was 2 crore 90 lakh. This line is useless. This line is completely useless. I'll tell you the reason. Fair value. If you need to show the fair value in the notes to accounts, to show fair value in the notes to accounts, that fair value should be from the balance sheet date. Clear? We are not supposed to check the fair value repeatedly throughout the year, only at the end of the fiscal year. You can see the fair value for March. And hence, please don't rely on this line where 290 lakhs is written. Ignore it, alright? They are trying to confuse you unnecessarily. We got nothing to do with the September value. The balance sheet will reflect the fair value in the notes, not the recorded amounts in the books, as the cost model applies. Then let's see what else is there. 1st October X5. Did you understand the question? I had a property. It was purchased in form of land for 2 crore. I had rented it out for 4 years. And for next 6 months, it remained on lease, then it was vacant. So, I have taught you the question for 4.5 years and that is your IP for those years. You are receiving rent of 20 lakhs per year. And if you find the property vacant in the month of October, so 6 by 12 of 20 lakhs would result in a rent of 10 lakhs a year. So, 20 lakhs for an year, 10 lakhs for 6 months. And for 4.5 years, property was rented out. It's your investment property. You will get rental income, put it into P&L. Fair value from notes goes to accounts. Fair value of March is relevant and irrelevant of September. Let's read further. 1st October X5. And I am here. X Limited immediately began to convert the property into 10 separate flats of equal size, which X Limited intended to sell. So in the ordinary course of business here, our intention changed on October 1st. On October 1st, our intention got changed. And on 1st October, we decided that we will develop this land by building 10 flats and sell them. Now this will go in Ind AS 2. You will have to apply transfer case. So whenever the transfer happens, it will be at the carrying amount of land, which is 2 crore, as it was bought for 2 crores. Then upon building flat on this land, construction costs will incur. We will get the cost of flat. Let's read further. Now, have you understood? So why was the question? Talking about 3 events? No? Then first, event is from X1 to X5. 4-year accounting period. Then, from 1/4 to September 30 X5, this is the second event. 6 months of current year. And the third one is from October 1 X5 to 30 on March X6. Here Ind AS 2 will apply. Here 40, 42. Also transfer case. So it is referring to 3 events. Further it says, X Limited spent a total of 60 lakh rupees on this conversion project between September 30 X5 to March X6, land worth 2 crore and construction cost was 60 lakh. The total cost is 2 crore 60 lakh rupees. Thus, cost of inventory is formed. Ind AS 2, cost or NRV, whichever is lower, I can perform the valuation for this and we will do it later. Let's read ahead. The project was incomplete. At 31 March X6, the work is not yet complete. It is WIP. The directors of X estimate that they need to spend a further 40 lakh rupees to complete the project. An additional 40 lakh rupees will be required. Further expenses are 40 lakhs. And after that, its market value will be each flat 50 lakhs. And we are building 10 flats. If one flat costs 50 lakhs, then 10 flats will cost 5 crores. 1 for 50 lakhs. So 10 for 5 crore. If the selling price is 5 crore. If 5 crore is selling price, we will include expense further in this. We need to spend another 40 lakhs. So the NRV that we have, cutting everything down, it will be 4 crore 7 lakhs. But the cost is 260. Whichever is lower, it's 260. There is no loss here. So if we perform valuation of WIP, first we will take selling price. Further expense 40 lakh will be from your pocket. And get 5 crore. 40 lakhs will go. And the net realizable value will be 460. We invested 260. Cost or NRV, whichever is lower, it's 260. There is no loss. Valuation can be done on cost. So you have to convert this entire story to step-by-step answer. The question has many things in it. Let's look. If you have to provide solution to this. Which question is this? 33. In the given question, in the given case, we can provide the following explanation. Different events. We have different events and we can provide different explanations for them. First, we have here from 1st April X1 till 31st of March X5. During the period of 4 years. The X Limited should classify this land as an investment property. At carrying amount of rupees 2 crore. Because It has been let out by X Limited to Y Limited on operating lease at annual rental of rupees 20 lakhs we will ignore fair value of rupees 2 crore 60 lakh 2.6 crore because which is given on 31st March X5 because cost model is applied. Okay, if we see in general, it is said to be as practical, but it is all theory. Even though it being a practical question, it is not, as we are only writing and just making notes of theory, right? Because this is case study, so we have to solve. Cost model is applied in books of accounts. We can show fair value in notes to accounts only. Now to the second part. From 1st April X5 to 30th September X5. During the period of 6 months. In current year. During the period of 6 months in current year. The specified land is still to be shown as an investment property because Y Limited has vacated the property on September 30th X5 and it becomes change in use has taken place on 1st October X5. The rental of rupees 10 lakhs for 6 months shall be transferred to profit and loss account as an income. We will completely ignore the fair value of 2.9 crores because we never value the property on a random date except balance sheet. We do not perform valuation on any random date beside balance sheet. So we will ignore this. Tell me what is the third event. Our third event is from October 1st X5 to March X6. During the second half. We should classify the specified land under Ind AS 2 as an inventory. We should change its heading from Ind AS 40 into Ind AS 2 on 1st October X 5 at a carrying amount of 2.6 crore. No, 2 crore because we consider carrying amount and not fair value. Land does not depreciate, it was bought at 2 crore, so it will remain at 2 crore. On balance sheet date. Valuation of given inventory shall be made. Under the guidance of Ind AS 2. Cost of inventory. This is for land. This is for construction. So it's 2.6 crore. Now point B. An RV 50 lakhs into 10 units minus 40 lakhs. This is selling price. This expense is yet to occur. If you get 5 crore, you will have to invest 40 lakhs, so the net will be 4.6 crore. Whichever is lower, $2.6 crore Now for valuation. Cost or NRV for whichever is lower, which is the principle of Ind AS 2. We studied this in Inter in AS2. So for this you need some knowledge of Ind AS. Everyone knows valuation is cost or NRV, whichever is lower. This was the question. First about 4 years. Then explained about the first half. Then explained the second half. There is no calculation at all. It's all theory and presentation. Let me check another question with you, okay? 33 is done. Come to 34. Please take it as very, very important. This is best question. So syllabus is almost same. The course content that you have, it has came from old scheme to new scheme, but Ind AS were there before and still there. That's why I have kept your RTP, MTP and past exam papers with me. And the question I have displayed on screen, this is question of RTP November 20. It's also in study material. The institute keeps adding RTP, MTP questions in study material from time to time. So this is also there. However, I consider this an RTP question as it appeared in RTP first. We will not leave any practical questions, so that you won't have to refer anything else. As long as you are taking classes from me. Let's say a child has ordered a class from me today. So all the amendments and updates until today will be in your pen drive or Google Drive. After that, there is nothing to do. You just need to follow up the Telegram channel. And if I send a message, you have to see it. And keep yourself updated. You don't need to look at another teacher for anything because the person who is going to be onto ships has no destination. Therefore, I want to say this to all CA final students very respectfully, that please follow one teacher. If you have any doubt in what I have taught, you feel incomplete and you wish to follow another teacher, then follow that and leave me. Follow one teacher. Just one. But if you go here and there to learn, there's nothing new. All of these are questions from institute. No one can teach you by creating their own new questions. I can openly challenge you on this in CA. If my question is extra and not in study material, it means I got it from professional commentary. I have seen and included the best questions that I found in the professional commentaries. So please have faith while doing. Keep following the Telegram and you don't have to do anything else. As you have already taken coaching, you should have faith as well. There is YouTube also. During our times, we always looked for someone to guide us, tell us what to do and how to do it. So we had to look for guidance, but in today's times you get to select what to watch. So much content is available, relevant and irrelevant. Today you get to decide. When you have taken classes from a senior teacher, quietly, I am studying on your behalf, I am looking at. So all the RTP, MTP questions that will come after you have purchased the class will be shared on Telegram. You don't have to do anything, just follow me forever, nothing else. The rest is up to you, there is no satisfaction. Right? The people whose videos you watch and whom you try to follow, they also teach after reading from my notes. It's such a big thing. Let's move to question 34. Read 34. This is a very good question. Do you need time to read the question? Please pause the video. Now students will say, Sir. Jindal sir, this question is so lengthy. Please see sir, it's such a lengthy question. How long should this question take? There is nothing in this. It will take time to read, but the answer is very easy. Let's do it together. In this you need minimum 30 minutes to finish the question according to the paper. And if this comes in exam, it will be for at least 12 marks. For 12 marks. Let's do it. Shaurya Limited, what a name, owns a building A, which is specifically used for the purpose of earning rentals. This means one thing is clear, that your building A is here an investment property. All right. Next line is that the company has not been using the building A or any of its facilities for its own use for a long time. This building A is not used in the business operations of the company. So it means you don't have to think about Ind AS 16. We earn rent from this investment property which is not being used from a very long time. Therefore, we are not applying Ind AS 16. Next, it is written here, the company is also exploring the opportunities to sell the building if it gets the reasonable amount in consideration, if they will get good appreciation. So they can sell this building as well. So whether you are going to consider rentals or appreciation of the building, both come under Ind AS 40. What I mean to say is that the building A will continue to remain under the heading of IP. It will remain under the IP. Both rental and appreciation purposes are being fulfilled. Let's read question further. Following information is relevant for building A for the year ending March X2. This means our current year to be taken here is X1 and X2. Let's see what is next. Building A was purchased 5 years ago at a cost of 10 crores. So here the building was purchased 5 years ago. 5 years ago in 10 crores, and the life of the building, it is 20 years. The company applies depreciation on a straight line method basis. So the essence is, if you have purchased property for 10 crore, if you have purchased a property for 10 crore, its lifespan is 20 years. So depreciation for 1 year is 50 lakhs. 5 years depreciation 2.5 crore. You have depreciated 2.5 crore rupees 5 years ago, and a depreciation of 50 lakhs will apply in current year. You purchased a 10 crore building. Over 5 years depreciation of 10 crore is applied. So it's 7.5 crore. There is depreciation of 50 lakh in current year. So the value of building will be understood. Depreciation 2.5 crore. 50 lakh depreciation is to be added. The depreciation will be 3 crore. There is nothing difficult to understand. It is very easy. There is nothing difficult. During the year, this year, X1, X2, a student had a doubt. He said here it is 5 years ago. So in 5 years, 4 are old and 1 is the current year. No. Here we can see during the year. So this information is in the beginning of current year, because during the year starts here. So this 5 years ago does not include current year as it is 5-year-old information, because the question starts here. So current year hasn't started. It will start in next paragraph. The company has invested. Here in another building named B, another building has been added in current year with the purpose of holding it for capital appreciation. Capital appreciation means this too is IP. Building B is also to be considered as IP because of appreciation. Next is the property was purchased on 1st April X1. This is also purchased at the beginning of current year. If it is purchased at the beginning of current year, depreciation will be applied for the entire year. What is its price? 2 crore. And what is its lifespan? It is 40 years. Let's divide 2 crores by 40. We will divide 2 crore by 40. So the annual depreciation is 5 lakh. When the figure goes in crore, my hands start shaking. I mean, it's 2 crore rupees. 40 years. So annual depreciation is 5 lakh rupees. Here depreciation of 50 lakh. Here is depreciation of 5 lakh. So what is the total depreciation? The total depreciation is 55 lakh rupees. Okay? You should read the question further. As usual, the company follows straight line method of depreciation. The company's depreciation will be charged on an SLM basis. We are able to understand this. Let's read ahead. Further, during the year X1, X2, the company incurred the following direct operating expenditure relating to the. I had told you one thing in the notes to accounts, that how much is the rental expenses incurred, you need to give the detail. That statement is being asked. So let's see how to make the statement. Look here. Rental. Sum of these two is 1 crore. This becomes our income. Promotional expenses is an expense. Fees, taxes, ground rent and repairs, all of these fall under the expenses. Legal, professional and commission are included in expenses. Plus, we have depreciation of property, which is also an expense. After all these deductions, you will get to know what is your net profit. If you are receiving a rental of 1 crore, then so are the expenses. 5 plus 1, 6. 6 and 4, 6 plus 4, 10. 10 plus 3, 13. Also, you have that depreciation of 55 lakhs. The rest will be your income. This is the question. So in this part of the question, you need to find carrying amount. In this part of the question, you should calculate the net profit or loss. What's given next in the question? The company does not have any restrictions and contractual obligations against the property A and B. Neither you have taken any loan, nor you have any contract or guarantee, nothing. Your properties are absolutely freehold. For complying with the requirements of Ind AS, the management sought an independent report from the specialist as to the fair value of the buildings A and B. They started talking about valuation. Fair valuation. The cost model applies to properties. The cost model applies to properties. Even if you have found the fair value, it will go into the notes to accounts and not into books. The independent valuer. Ind AS 113 also says this, that the valuation should be independent and it should be all inclusive. I've made you write down these points. Has valued the fair values of the property as per the valuation model recommended by the International Valuation Standards Committee. Everything's fine. The fair value has been computed by the method by streaming present value of future cash flows, namely discounted cash flows. I have told you so many stories within a story for this. He says that way. did the property's valuation by independent valuers. The independent valuer followed the international standards. So the fair value of these properties has been calculated by discounting their future cash flows. What should we do? Valuer will give a certificate after calculating the fair value. We'll use it. How is he doing the valuation? What cash flows is he using? How is he discounting them? Pointless story. They've extended the length of this question without any point. The other key inputs for the valuation, again the same thing. It's explaining the base of valuation and its other key inputs. Estimated rent per month per square feet for the period is expected to be in the range of 50 to 60. You are getting a rent in the range of 50 to 60 rupees per square feet. It is thought that this is your future cash flow. It is further expected to grow at a rate of 10% per annum for each of the 3 years. Rent will increase by 10%. After a specified period, we included the increased rent, and it was discounted between 12 to 13%. How much rent will be generated and at what rate after discounting the property's value? These are the inputs for valuation. The inputs for valuation are given here, but how does it matter? What do we have to do with the inputs for valuation? We need the fair value for our notes to accounts. Now this story is being told. What we'll do with this? In the third part of the question, we will write the independent valuer has done the valuation on the basis of expected cash flows. So they expect this much rent and have set this rate. We'll just write the story in the paper as heard. Fair value isn't mentioned. Wasting time on useless things. What's given next? Assume that the fair value of the properties based on the discounted cash flow method is measured at 10.5 crores. Now this is an important point here. The fair value of the properties is 10.5 crores. We'll write this in notes to accounts. The treatment of fair value of the properties is to be given in the financial statements as per the requirements of Ind AS. Whole story is fine. What's the question asking? What would be the treatment of A and B in the balance sheet of Shaurya Limited? We will apply 40. It's held for rental, held for appreciation. We'll calculate their carrying amount using cost model. The question is asking, say, how will you treat Shaurya's balance sheet? Investment property. We'll use cost model and find carrying amount. What else? Provide the detailed disclosures and computations in line with the relevant Indian accounting standards. In the disclosure, show the net gain by deducting rental expenses from rental income. We will find it. So after this, we'll create the reconciliation statement if needed. We'll create reconciliation statement of property for depreciation, also for rental and expenses. We'll write a note. Find depreciation on SLM basis. I will give you all the disclosures I can. It's a simple job. But you didn't read the question carefully. You need to work on the disclosures along with the balance sheet, reconciliation statements and disclosures. We have to explain all these in the notes to accounts. It will be lengthy. We are talking about disclosures here. Fair value is included in disclosure. Okay. Treat it as if you are preparing a separate note or schedule of the given assets in the balance sheet. Assume that you are creating a financial report. So I will create the financial report for you. Let's see. I will solve the first part of this question. It's question 34. Treatment of building A and the building B for the purpose of balance sheet. Shaurya Limited. In the given question, it is clearly specified that building A has been let out and building B has been held for capital appreciation. Which indicates that these properties shall be treated in financial statements as the investment properties. Accounting for properties will be made under cost model. First part of the question is done. Let's calculate the carrying amount. The following statement shall be prepared to find out carrying amount of IP. Statement showing carrying amount First, we'll write the original cost. Tell me what was the cost of building A? What was the cost of building A? The cost of building A is 10 crore. And 20 years? 5 years ago. Okay, students. Original cost 10 crores. And its original cost is 2 crores. Total is 12 crores. Depreciation. in previous years, we purchased the asset of 10 crores. 20 years. From 10 to 5 years, 5 years ago, we have already applied a depreciation of 2.5 crores. We bought this in the current year. If an asset is purchased in the current year, how will that have past depreciation? So this will be the carrying amount. In the beginning, current year, here it's 7.5 crores. Here it's 2 crores. Total 9.5 crores. Current year's depreciation. $10 crore divided by 20 years. Take the depreciation of 1 year. So 50 lakhs. We will divide 2 crore by 40 years. Its depreciation is 5 lakhs. Total depreciation 55 lakhs. Carrying amount at the end. So this will be 7 crores. Here 1.5 crores. This will be 8 crores. This is 5 lakhs, right? So this will be 1 crore 95 lakhs. Now it's right. The total will be 895. How will you treat this? This is done the first part. Second part of this question is disclosure requirements. Disclosure requirements. Under Ind AS 40, if you have to make disclosures, then there will be many disclosures. First will be reconciliation statement of IP at cost. We'll show the depreciation separately. We'll show the property separately. So, first of all, we are going to show the opening balance. Then we'll write the additions. Replacements. Disposals. Closing balance. So what is the current year now? Which is our current year now? X1, X2. X1, X2. Our opening balance was 10 crores. The building A. We added 2 crore rupees. The building B. 12 crores. Then we will write, we had the opening balance for building A of 10 crores. I am making it at cost. Purchased for another 2 crores, total 12 crores. I'll write in B. Reconciliation statement of depreciation, and that too accumulated. We'll see how old or how new it is. We'll see everything. Opening balance. Depreciation charged in the current year. How much we charged in the current year? Disposals. Closing balance. We had 2.5 crores. We had 2.5 crores of building A. Let me check for you. Look at the top. We have past depreciation of 2.5 crores. The depreciation that is charged for the current year is 55 lakhs. How much did we charge in the current year? 55 lakhs. A and B both have been charged. We have done this to A and B. The total will be 3 crore and 5 lakh rupees. So now, we'll write net carrying amount below this. A minus B. So we will subtract 3 crore 5 lakhs from 12 crores. So we'll get this figure. 8 crore 95 lakhs. Point D. Statement showing net operating gain or loss from investment properties. For this, firstly, we will write total rentals. You need to see the question to know how much rent you received. You have received a rent of 75 lakhs plus 25 lakhs. $75 plus 25. So you have received a rent of 1 crore. You received a rent of 1 crore rupees. Total operating expenses. Total operating expenses. Check this list of all expenses. 5 plus 1 plus 2.5. 5 plus 1 plus 2.5 plus 1.5 to 1. 1.5 to 1. Let's do its total now. 5 plus 1 plus 2.5 plus 1.5 plus 2 plus 1. We have spent 13 lakh rupees. We will subtract depreciation of A for X1 and X2 limited. What was the depreciation? It was 55 lakh rupees. Tell me what's the net gain or net profit. All this information. 5 plus 1, 6, 6 plus 4, 10, 10 plus 3, 13. Okay, fine. After this is the point E. I have to tell you about the depreciation policy. The entity has charged depreciation on A and B under SLM, straight line method. One thing is you will have to write A, B, C, D, E, F. The fair value of investment properties is actually 10.5 crores, which has been valued by independent valuers. Independent valuers. On the basis of future estimated rents. They've calculated fair value. Future rentals 50 to 60 rupees per square feet. PV factors at the rate of 12 to 13%. So we have created the complete disclosure report, and this is your working. This was the question. There's nothing to be worried. Question is lengthy for no reason. Let's move on. First, I made you do the property accounting in the financial statements. Then you were asked to make disclosures. I have written all the things I had in disclosures. Let's move on. This reconciliation statement here. You are also aware that we bought the building this year. Therefore, in the opening balance of the building or depreciation, it's just the building A here. We bought B in current year, so it's in the additions. After that, question 35. Mark this as important. This question was asked in one of the RTP. This same question from RTP was asked in one of the exam as well. This will be your homework. So solve this as homework. The same question. This is question number 38. It was for 5 marks. Was also asked in exams. RTP questions are sometimes asked in exams. So I will only make you do it once. This will be your homework as the question is same. Let's see question number 35. You should read the question once. I have put down my pen. It's worth checking out the question even if it's only worth 5 marks. In CA final, every single mark is very important. Every mark counts. Earlier there were 4 plus 4 sets, a total of 8 subjects. There are only 3 subjects in group 1. So if I write this down for you like this, if anyone doesn't get the value of 1 mark, the figures that are written on your screen, what's the value of 1 mark, you understand. If you miss 1 mark, there's no exemption. You lose 1 mark resulting in your failure. You will have to rewrite the exam from start. That's the value of 1 mark. Neither exempted nor passed. Then rewrite the exam. And I hope you understand the value of 1 mark as I have been explaining it to you all. There are mark sheets. I have thousands of children studying under me. So you get some sheet like this, it is very sad to see it. Hence there's anger on the institution. Why did he stop the child? He should have let the child pass. These students should be passed. Give them 1 mark, making their score 39 to 40. The child's back reading again. CMA is a tough journey. Either understand this from your teachers. When we say each number has value, or have your own experience. Question number 35. Question 35. In this question, there are 4 points in case study. It's a 5 mark question. You have to give 4 answers. What does the question ask? X Limited owned a land whose future use was not fully determined. Strange. If you own a land and you don't know about its use. So I have told you this case study. Consider it as investment property and apply 40 to it. Land with an undetermined use comes under investment property and 40 applies to it. And this position is from 31st March X1. Okay. How should the property should be classified in the books of X Limited? As at March X1, the answer to the first part begins here. First, write this down. write this as you see the question. I am solving question number 3538 is your homework. In the given case, land is held with undetermined use. Due to which it should be classified as an investment property as on March 31st X1 under Ind AS 40. First part of question is done. But what we thought that this question basically have 4 main requirements. There are not 4, it started at the beginning. Okay. This is how questions are framed. One question carries many points. That 5-mark question has so many points in it. We have to manage time, right? So the question's requirement is not justifying marks. Question's requirement is more. Let's read the question further. During June X1, X2, it started. It had already started after the March, understood? X Limited commenced the construction of a new office building on the site for their own use. So on the June 1st, this should be transferred. Transfers on June 1st and that too under Ind AS 16. So from 40 to 16 and that too in carrying amount. Presuming that the construction of the new office building will continue to be still in progress as at March 31 X2 and as of March X2 it's still in the progress. Now you have to show the next classification as of March X2 because it has to be reported as per the balance sheet date. Question is saying, pay attention to this part. How should the land property is to be classified by the X? In financial statements as at 31st March X2, March X2. So now in March X2 we are going to show this as Ind AS 16. Until June it will remain as investment property. After June it will be Ind AS 16. Let's write the next part. On 31st March X2, they specify specified land shall be disclosed under the heading of PPE as per Ind AS 16 because construction of an office building on this land is in the progress. is in progress on balance sheet date. Land going to be classified for PP and for construction work will be in capital WIP. The construction WIP will be disclosed in balance sheet under the heading of capital WIP. Land will be under PP, constructions under capital WIP. It means that land has a clear objective of its use. Now, the objective of land is clear to us. Building will be built here and it's under construction. We should move to the next part. It's practical, but we're on theory. Will there be any change in the carrying amount of the property resulting from any change in the use of the investment property? No, I don't think they are saying that. Will there be any changes in the carrying amount? If yes, when we do transfers from PP to investment property or from investment property to PP, whenever you transfer, we do it on carrying amount, values won't change. So our answer is no, no change. Transfer is always at carrying amount. In this, the company initially had an IP. Now it's a PP. Transfer will be on carrying amount. There will be no change in value. No? There will be no change. In carrying amount, of land, because transfer from one heading to other heading is always made. At carrying amount, carrying amount will remain same. No change in carrying amount. In this question, we need to move on to the next requirement. And I understand that I'm writing a bit fast. Okay, please take a pause and then complete your notes. I want to finish these as quickly as possible and move on. After this, in the next part, what does it say? Whether the change in classification to or from investment property is a change in the accounting policy to be accounted for the Ind AS asset. Okay? No. If you change the use of any property, initially I believed I can earn rent from property, but later I built an office on it. So this is not a change in policy. This is change in the use. And what did I ask you to write in class? We don't even need to pass an entry. Only change the heading in the balance sheet and that too on the carrying amount. There's no need to change value or pass an entry, just presentation in balance sheet will be changed. Move it from Ind AS 40 to PP and from PP to Ind AS 40, that's all. Headings in balance sheet would be changed. The property was yours and it is still yours. You were owner then and you are still the owner. Use is changing, that's why heading and presentation is also changing. This is not a change in accounting policy. Our Ind AS 8 presents significant risks that warrant careful consideration. The errors that we rectify in this, or if we change any policy, we need to consider retrospective effects. We don't operate prospectively in Ind AS 8. You'll get that to study in Ind AS 8, not in Accounting Standards 5. In AS 5, we work prospectively. See, if you studied AS 5 in intermediate, you'll know when accounting policy changes, we go retrospectively. In errors and in estimate, we go prospectively. In Ind AS 8, anything comes go retrospectively. Ind AS 8 presents significant risks and there is no use of it also. So this is asking you, when you made the classification change, is this a change in policy? Would we consider Ind AS 8? No. Answer is no. No entry will be passed. And nor change in amount, and this has nothing to do with Ind AS 8. It's not an accounting policy. It's up to you how you use your building. Accounting policy? The stock valuation using FIFO is now using the weighted average. Change in method. Your accounting policy has changed. Okay. Right. There will be no application. Of Ind AS 8. In given case, because a transfer of land from Ind AS 42, Ind AS 16 is not a change in policy. There will be no entry for such. Change in heading, even value in books, shall also remain same, because transfer is always made at carrying amount. Transfer is also based on carrying amount. There is no value change and no entry is passed. How does Ind AS 8 apply to this? This is not a policy change. You can use it however you like. 5-mark question when it must have been in exam. And the student who hasn't covered RTP well, it's a loss for him. The student who attempts RTP, MTP and past exams, and they will never be surprised after seeing the question paper, would know where they read this question before. Okay. Moving on to the next part of the question. I have this. D point. Would your answer to A? This is A, which I believed as IP. No. I thought it would be an IP here, but it turned out to be PP. Okay. We were building office. For March 31 X2, we believed it to be a PP. Will your answer be changing in A? Be different. If there were to be a management, the intention to commence the construction of an office building intended for use. However, no construction activity was planned by March 31 X2. We'll see what's here. Management says that they have a piece of land. We'll build an office building here. We will use it as office. However, till the balance sheet date, no construction activity has started yet. There was absolutely no construction plan in place. With no construction planning. Okay. And here it had already commenced. Answer is different now. The start of construction marks the beginning of the action itself. The change of classification is definitely there. You are just planning and you haven't even started the planning. The intention is to build an office building. However, construction neither started nor was there any planning. And now tell me on March X2, will your response be any different? Answer will change. Until the planning of your building's construction begins, we'll consider this as a story. Till we take action. If you have called a contractor for planning of the construction, let's assume that this land will be used for office only. We will change it. There's no planning or construction. You just have the intention to build it. Just a story. You didn't take any action. I can write in the D part. Right, yes. There will be a different answer. As we have given before, as mentioned above, if entity has not taken any action regarding building, construction of office building, then it will remain, then the specified land will remain as an investment property. The specified land will remain as an investment property starting of the work. Is the proof that you are making some change. You haven't planned, you haven't done the work. As of now, the property would remain as the property. This was the question. They'll ask anything in exams. The same property has been asked differently. Now, moving on to the next question, number 36. Also an important question. Okay, this has come up in MTP. MTP question. Question number 36, you should read it. V. We are in fact nearing to the end of our work on Ind AS 40. Okay. We are about to wind this up. Few questions are left. Now 36. You need to address this question quickly. Here you just have to add and do nothing else. Just keep adding and adding and adding. That's all you need to do to complete the task. In this, on 1st April, X1, an office block was purchased for 50 lakhs. Includes non-refundable property tax, transfer tax and legal fees during the process. 2,50,000 and 50,000 the cost of the property is 53 lakhs. During X1, the entity has redeveloped the building converting into a 2-story building. It's a double-story building. Ground floor, first floor, 2-story building. They are telling the expenditure for redevelopment. Redevelopment or renovation is a capital expenditure and will be capitalized. 1 lakh for building plan. 10 lakhs construction costs includes 60,000 refundable tax, which should not be included in cost. It would be 9 lakhs 40,000. Spend 40,000 rupees. Abnormal wastage. The point written in the book that when you do self-construction, you can charge interest. Don't take abnormal loss, it goes to P&L. What to do? 50. Adding 2.5 and then 0.5 results in 53. To 53, add 1 and then add 9.4. That's the cost. Okay. This in P&L. Next in question. When the redevelopment of the construction of the building was finished on the date 1st October X1. We purchased the building on the 1st of April, but the renovation was completed only on the 1st of October. The entity rents out ground floor of the building to its subsidiary under an operating lease in return for rental payment. No problem. You have 2 floors. So 1 by 2, 1 by 2. One that is let out. We'll add 40 to that. And whatever we use, we will add 16 to it. This subsidiary uses the building as a retail outlet for its products. What is our tenant doing with the property? We are not concerned. If we gave 1 floor to our subsidiary and the subsidiary opened a shop there, the subsidiary is running its business there. Now what is the subsidiary doing with it? We are not concerned with that. If we were to prepare consolidated financial statements, then we might have thought about it. So it's simple. The cost of 1 floor will be considered as 40 rupees because I have leased it to the subsidiary. Increase 1, it will come under 16, which I will use. The entity, read carefully, kept first floor for its own administration and maintenance staff uses. The question has explained and clarified this. The question clearly states that the holding company has rented ground floor to subsidiary and opened its office on the 1st floor. So if 1st floor is our office, it will come under 16. Ground floor is given on rent, it will come under 40. It's completely clear. The question further says equal value can be attributed to each floor. We have already done attribution of values. How will the entity account for all the above mentioned expenses? In books of accounts, tell me what should we do with expenses? Should we capitalize? We will write note on abnormal losses in P&L and for refundable tax that it's not included in cost. As on 1st October, you need to provide a detailed working of properties cost. What else you have to show? Also, discuss how the above building will be shown in consolidated financial statements and separate financial statements. Separate I have explained already. So it's half 1/2 in 16, 1/2 in 40. When we are talking about CFS, it goes to subsidiary from holding. So subsidiary is using it. When we combine H and S, a group will be formed. Building is being used within group and not outside. If it's used within group, then we will charge 16% on overall amount under CFS. I have already explained this in class. When the holding transfers property to subsidiary, do things separately that need to be done. In CFS, both the holding company and subsidiary will be consolidated, cancelling the lease. The property returns to the group. If this subsidiary will sublease the property to someone else in future, then the third party would have problem because subsidiary itself is using it. The holding company gave property to subsidiary who is still using it, so it remains with and within the group. So we will put 16% on overall property in CFS because lease is cancelled. The question formed is very good. If in CFS, lease, any student is not clear and has doubts about the concept of lease, and you are unable to recollect the point in CFS, open your book right now. Go to the various issues and maybe issue number 5 was given by me. Concept number 4, various issues, there you will find CFS. What is explained there? Don't leave any queries or doubts pending. Calculation of cost of building. On 1st October X2. It's X2, right? X1. First, expenditure incurred on acquisition. First, we have spent money on acquiring this. Purchase price. Instead of as on, we will write up to first, I will write down purchase price. Transfer cost and legal fees. We bought this for 50 lakhs. Transfer fee of 2.5 lakh rupees. Legal cost was 50,000 rupees. And the total is the total acquisition cost is of 53 lakh rupees. We have invested some amount in redevelopment from 1st April to 1st October. The first one is permission or approval cost. This cost is 1 lakh. Construction cost. ₹9,40,000. Now total cost. 53 and 1. 53 plus 1 and 940 is 63,40,000. Cost for each floor. $31,70,000. As there are 2 floors. We have not considered refundable taxes of rupees 60,000 in construction cost. The amount of abnormal wastage shall also be transferred to P&L. We will not take cost of abnormal waste and refundable duties. We got the cost of 1 floor. This is the first part of the question. Let's move now to the second part. Treatment of building. In books, we have 2 books with us here. One is SFS. Separate financial statements. They have rented out 1 floor and they will use the other one. The entity should apply Ind AS 40 on ground floor because it has been let out to its subsidiary. On operating lease, but it should apply Ind AS 16 on first floor because it will use this space for its own office purposes. When we come to CFS, when we come to the CFS, the lease will be cancelled, the property will return to group, and we will charge 16% on the entire property as it is still within the group. This wasn't given to third party. We will apply Ind AS 16 on whole property because property is used within the group and mutual lease shall get eliminated. Lease will be cancelled. The property is still within group, put in 16. One part is being used by holding and the other by subsidiary. The both are using it combined together. Put 16. The question is just a bit tricky. They ask CFS, SFS, they can twist and ask any question anytime. Now I am giving you a question for homework, okay? So the 37th question is for your homework. You can read it. There's nothing for me to tell you about it. Try to solve it by yourself. Okay, so let's go back. 36 is done. 35 is done. 34 is done. 33 to 32 as well. These are MCQs. These are MCQs as well. And all the students know that your CA final FR MCQ now carries 30 marks as per the rules of the new scheme. So I will give you a separate booklet for MCQs. We will solve them separately. And on this pretext, we will finish all the revisions. So please, for now, you can keep these MCQs on hold. You don't need to do these. If you wish, you can read them for self-reading. However, I will make you do the MCQs in separate folder. We are not doing it now. Understood? You will get a separate folder for MCQs. Separate booklet. So this question 27, 28 and 29, 30, 31, these are some MCQ questions. I want you to keep a hold on these MCQs. We will do them later. You can read it yourself. I have no problem with that. There was one question left that I could discuss. We will definitely do the MCQs. Question 26. This will go for homework. For your self-reading. As soon as I gave you the homework, you became upset. That's such a long question. How can you give us for solving for homework? So let's check the question. It's very easy. I know that you see such a lengthy question and say, how did sir give this as homework? Look. I will read the question to you. There's a company listed on stock exchange. Okay. Ventured into the construction of a mega shopping mall in India, which is rated as the largest shopping mall in India. What do we have to do with that? Make it big, small or largest? We are concerned whether you will rent it or sell it. If you sell it, Ind AS 2, if you lease it, then 40. We are concerned with that. The company's board of directors, after market research, they decided that instead of selling the shopping mall to a local investor who had approached them several times during the construction period with excellent affairs, which he progressively increased. Let's see. The line that is important. Company's board of directors after market research decided that instead of selling, the company would hold this property for the purpose of earning rentals by letting out space in shopping mall to tenants I will explain the meaning of these two lines in the middle, which I did not cover. The company is building the largest mall in India. The company's board has decided, instead of selling it, they will let it out. They won't sell but rent it. And there is an investor who has been constantly approaching them, who is bringing various offers in order to convince them to sell the mall to him. But they won't sell it. It is written in here. This is an investor who has approached them several times, bringing good schemes. They don't agree, they have to give on rent. So this means this shopping mall will come under Ind AS 40. Ind AS 40 will apply to this. Let's read it further. For this purpose, it used the services of a real estate company to find out the tenants. They need international chains. Basically, the agent is bringing various kinds of proposals for companies to open shop, rent it. This is of no use to us. The shopping mall was fully let out. It was all rented now. Tell me one thing, is this story of any use? The only thing that matters is that they are letting out. And 40 will be applied. The construction of the shopping mall was completed and the property was placed in service at the end of 16. The work is complete, it is put on rent. According to the company's engineering department, the computed total cost of construction is 100 crore. The expenses are 100 crore rupees. Its useful life is 10 years and residual value is 10 crore rupees. If building costs 100 crore, its residual value 10 crore. 10 years of life. So your depreciation cost will be 9 crore rupees per annum. And what is question asking us? The cost is 100 crore, residual value is 10 crore. Lifespan 10 years, depreciation of 9 crore. Therefore, what would be the impact on the profit and loss of the companies under the cost model? We charge depreciation in the cost model and record it in profit and loss. We will only write this, that depreciation will be charged as an expense in the profit and loss account and rentals shall be credited to the profit and loss account. So in P&L account, both will be recorded. Is it a question? It's asking what will be the impact on P&L. Based on the acquisition cost of 100 crores, a residual value of 10 crores, useful life of 10 years, and using SLM, the depreciation will be 9 crores and it will be charged in profit and loss account. That's it. You can read yourself. I have only asked you all to keep just one thing on hold, that is MCQs. Multiple choice questions. I will teach it separately here. You can go through all the main questions, big questions once. MCQs that are in this, you can read by yourself, but I will discuss all these questions with MCQs. If there is any question remaining apart from MCQs. Besides that, if I miss to attempt any question, you can read and understand as homework. In self-reading, I have tried my best to make you practice maximum questions within this. Okay? Thank you very much. Take care. Bye-bye. Love you all. See you in next video. This Ind AS 40 now ends here. Bye.